Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Overnight, the Australian dollar staged another down challenge and this time is near enough ready for the next contest, that is at 65.1995. This level is a key point as a break beneath here will give further exposure with an immediate target seen at 65 cents. This is not a technical target. I feel that this is where the market may pause or at least catch its breath before the next challenge, which is around 63 cents. So therefore 65.90 is a key level, so do keep an eye on it just in case we do see the break. Looking at the trend, the ADX is bearish and also there's been two challenges at the midway point on the RSI which has failed. Along with that, with the MACD married up, does support the bearish case into today's session. With the dollar index, which measures the greenback strength against a basket of six major currencies, refreshing its highs around, or 7-week highs, should I say, around 103.50, is now only about 50-60 points away from its objective, that is at 104. This has put very much strong attention towards the downside, then target around 107 figure 25. Looking ahead today, we get the US Federal Reserve minutes from its meeting earlier this month of 2nd and 3rd of May and may give some clues in how the rate path is going to unfold further, whether we see another hike, that is in June, and also the fact is that we're seeing many Fed officials still remaining somewhat hawkish after the recent comments this week. This should inspire further bullish traders to buy the US dollar. And therefore, a break of 107 exposes the region of 106.80. The trend is bearish from the ADX. And like the Aussie, the RSI remains under the midway point, married up to the MACD to a negative case. The dollar yen catches its breath since its recent bull run and still very much on track to take the challenge to 140, I feel, due to the fact that if we look at the broader or the primary picture, which is on the weeklies, everything seems to be in play to support the upside case. 3 weeks of bullishness, an ADX trending to support the upside case, and also the MACD is married to the RSI. Any pullbacks likely to be limited. Another challenge to the downside found support around 123.80 for sterling, but still not quite out of the bearish zone, even though there is some bullish divergence as the eyes look to the UK inflationary data today, which is expected to drop around 10.2 from previous to about 8.3. That would give some or alleviate some pressure from the Bank of England of hiking rates as aggressively. Keep an eye on this support level of 123.80. A break would see a move down to 122.80 area. Although the market took another challenge for the third time at 1,952, we've got a hammer in play and respected. But the technicals are still negative right across the board here from the MACD, the RSI and the ADX. It's holding the bear case. So I still feel there's a lot of work to do to turn this market around. Therefore, we could see another down challenge. A break of 1,952 gives way towards 1,928. Another upstep for oil and looks towards this $74 cap. Now, a break above here would give further scope up towards 76. I feel the market doesn't really want to be short considering we saw that strong rebound off that 64 area and also from 69.5. So do play a little bit caution into the bear case, just in case we do see a break to the upside and see a further rally, as I mentioned, to about 76 or even $78 a barrel. Overall, though, any pullbacks likely to be shallow. Well, that's a wrap for today. Thank you very much for joining me. And as always, look out for the intraday report and I hope you enjoy the rest of the day.